Hello, welcome to Business Morning right here on Channels Television. We see the markets about to open at this point. Let's get to the top stories that set your agenda now. Let's get a check on what's playing out with oil prices. We're seeing the United States and China extending a pause on higher tariffs, easing concerns and on escalation of their trade war that's supposed to disrupt their economy. So we're seeing oil react to that. See WTI crude $64.11 a barrel, up 0.23%. This morning. So we're still seeing that range trade right there in the oil market. Brent, $66.85 a barrel. They try to make a run for $70, but that didn't hold. U.S. President Donald Trump has extended a tariff truce with China to November 10th, staving off to triple-digit duties on Chinese goods as U.S. retailers, they're prepared for critical end-of-year holiday season, maybe a dirty December at this point. Meanwhile, the federal government earned 5.21 trillion naira from crude oil, gas sales, and other upstream activities in the first half of 2025, and that's according to the Nigerian Upstream Petroleum Regulatory Commission, that's the NUPRC, figure drawn from royalties, gas sales, flared gas penalties, and joint venture proceeds, represent 42.7%. That's a record 12.2 trillion naira generated in 2024, but only 34.7% of the 15 trillion naira revenue target for 2025. NUPRC's latest report to the Federation Accounts Allocation Committee shows about 1.04 trillion naira came from NNPC's limited joint venture and production sharing royalties, alongside 315.93 billion naira from the contentious Project Gazelle in January and March. So that's, there you have it. To agricultural industrialization now, Nigeria's National Sugar Development Council, they've inked agreements with 4 operators to establish greenfield sugar estates set to collectively deliver 400,000 tons per year. Each operator, Brent Sugar, or your Niger Foods, Niger Legacy Sugar, Damawa, and Umza Bauchi, will build a 100,000-ton capacity facility in their respective states as part of broader strategy to curb sugar imports and preserve foreign exchange. The council will support the ventures with customized project development assistance and critical cost coverage to ensure commercial viability. All right, let's look at money at this point. African startups have already raised a staggering $1.4 billion in funding in the first half of 2025, a remarkable 78% surge year on year, highlighting a significant rebound in capital flows across the continent. Equity deals accounted for roughly $950 million, while debt financing saw a sharp uptake to $400 million, thanks in part to a blockbuster $137 million raised by Wave. Issuing markets are shifting. South Africa led the pack, $345.1 million, 28.5% of that, closely followed by Egypt at about $283.5 million. Senegal, powered by Wave's debut and their debt facility, that surged to $147 million, while Nigeria and Kenya posted $121.9 million and $83 million, respectively. The latest raise this month, we got that one yesterday. Nigeria's fast-growing on-demand delivery startup, Chowdeck, secured $9 million in Series A funding to roll out a quick commerce strategy and accelerate its expansion across Nigeria and Ghana. It was led by Nova Star Ventures and backed by investors, including Y Combinator. The round marks a major milestone for the YC-backed platform as it bets on faster deliveries and deeper market penetration in West Africa. So that's the latest raise for the month of August, $9 million there for Chowdeck. We'll keep tracking to see how it builds for the whole month. And in a bold future-forward move, Nine Mobile has announced the formal commencement of its transition to a new corporate and consumer identity, T2. At the unveiling of the new brand identity in Lagos, the Chief Executive Officer, Bafemi Banigbe, said the rebrand represents a total evolution and symbol of the company's renewed commitment to innovation, resilience, and a deepened focus on customer experience. Take a listen.
Nigerian Communications Commission, the NCC.
Nigeria's telecoms industry is set to experience a new and upgraded service delivery as T2, formerly known as Nine Mobile, brings industry players, regulators, and management to witness the dawn of a new era. The Chief Executive Officer, Emerging Markets Telecommunication Services Limited, says this move is a strategic push for speed, market positioning, and tech-driven service delivery.
We are redesigning our business to become leaner, to become faster, to become smarter. We are becoming a digital operator. And by that, I'm talking about an operator that is data-driven, that is cloud-native, that is API ready for those who speak my tech language, and a business that is also very agile.
The telecoms company says this strategic brand migration marks a pivotal chapter in the company's business transformation, just as the chairman, EMTS, Thomas Etu, assures subscribers of a whole new experience.
Welcome to a new beginning with us. This is indeed the dawn of a daylight and the start of the manifestation of our bold vision for a telecommunication brand that will have relevance in your daily life beyond call and data.
In his goodwill message, the Minister for Communication and Digital Economy disclosed that with the sector contributing over 16% of the country's gross domestic product, the federal government is committed to driving its sustainability.
This is why we are leading an investment round to democratize access through Project Bridge, the 90,000 kilometers wholesale open access network.
Make some noise for T2.
Following the successful rebranding, bringing on board T2, the stage is now set for a renewed landscape in Nigeria's telecom sector.
That's your cue.
We see ourselves as the enabler of the creative and the innovative economy, and that is the niche that we are playing at. So we're not just a telecom company, we are your digital lifestyle partner. That is what we want to evolve to be.
The company says the transition to the T2 identity will be rolled out in phases to ensure uninterrupted service anchored on 4 pillars: speed, smart living, digital lifestyle, and trust, ultimately positioning itself as a bridge between connectivity and impact.
And now to our first conversation. We see Nigeria's business landscape is as challenging as it is full of promise, from fast-growing digital ventures to untapped opportunities in manufacturing, agriculture, and creative industries. The country offers a unique environment where resilience, innovation, and strategic risk-taking are key to success. For entrepreneurs, spotting the right opportunity and executing effectively can mean building not just a thriving business, but an enduring legacy. Today I'll be speaking with a businessman with his hands in beauty, media, fashion, food, hospitality, sports industry. And I'm talking about Mr. Ahmed Lawal, is a managing director of Lamad Concepts, and we're going to be discussing entrepreneurship in Nigeria. We see the data there showing. Great to have you this
Very
morning.
nice
Good morning.
to be here, Ladi.
Yeah, so, you know, we've been called a hustler economy. You know, at this point, everybody's doing something.
Yeah.
You know, selling something, you know, at this point and trying to, you know, make ends meet. But there's also that notion that most of the time you expect some of these, you know, entrepreneurs to break out from, you know, being small, being medium, you know, break out from all of that. But before we get into that, I want to talk about your journey. You have hands in beauty, pharmacy, and I'm wondering, how do you juggle all of that? Talk to me about your first venture.
So I've been in business for a very long time. I started in 1999, selling books. And from then on, we just had to go from one thing to the other, doing whatever it is that was going to bring in legitimate money. And so, but I've been fortunate from an early age to be able to have insight into how things are done in the corporate world. Now, I had a stint at then Nitel during my IT days. I also worked on the Corporate Affairs Commission EDMS project. So we handled indexing of files from the physical, you know, paper era to the digital era. So we did that conversion. And so it showed me how, you know, companies are registered, how the directors are, that intricate workings, you know, in the background that people don't just see. So today you see First Bank, but who are the owners of First Bank? Who are the people who run it? How is it run? And I've always been very, very curious. So I read novels a lot growing up, and also, what do they call it? The annual reports of businesses. It always intrigued me. So I got, that insight into how things are done in the background, as opposed to what most people see, which is just the surface of it. So, from then on, we started to have an eye for opportunity, and then we just continued to.
So, spotting opportunities, that's, one thing.
Yeah, it's key. It's very, very key.
How does it, work for you? Because you've touched on, beauty and products.
Yeah, so,
I'm wondering how that industry is actually doing right now.
Yeah, it's one of the fastest growing industries, the beauty industry. Every corner you turn now, there's a salon around, And in the past, it used to be an issue of barbers and stylists opening small stores and then, doing their thing. But now, people who, like I, for instance, I'm not a barber, not a stylist. I'm just a businessman. I don't know how to cut hair. People ask me that all the time, that, are you I don't even know how to hold a clipper. But I'm a business person, and I cited an opportunity there that we could harness. And so we came in. And so now a lot of people who are not, traditional vocational, they have come in, and now they're doing business. So
technically, you don't have to have that skill
to be able to invest in it.
In the business you're going into.
Yes, and that's what entrepreneurship is all about, solving problems and making profits from it. So you talked about opportunities, citing opportunities, and I think that's one of the things that we are missing the most. As I believe wholesome completely in entrepreneurship being the only solution that can move Nigeria from where we are now to where most Nigerians want us to be. Government's function in it is very, very minimal, which is like just providing legislation and policies that will help entrepreneurs to thrive.
And that enabling environment.
That enabling environment.
It seems like a lot, though, sometimes.
It is quite a lot. And it is because that is, I'll not say completely missing, but I think there's a lacuna. There are a lot of government policies that are unknown to the people, and which, if known, would have encouraged a lot more people to do business. If known, would have encouraged a lot of existing businesses to grow. There are a lot of grants that government, in partnership with foreign bodies, have in place that a lot of people are not even aware of. There are a lot of policies like tax-free. If you are doing so thing for so number of years, you are going to be tax-free. A lot of people talk about Dangote, monopoly, this government favors him. But he just finds out what the policy is, keys into it. There are some sectors that government wants to develop. And because they want to develop those sectors, they give incentives. You, as an entrepreneur, you have to go in, find out what are those incentives that I can use to make my business larger. So, personally, I've trained my mind to always see problems as an avenue for growth. So anytime I have a problem, I have a very, very common saying that I say all the time, that whenever I have a problem, I will throw business at it. That's, if you ask me, the best way to cite opportunities.
Okay, so as an entrepreneur, is it a risk, when you have your hands in, different industries, at the same time? Does that reduce what you would have gained if you focus on just one thing?
Okay, so I think what works for Peter might not work for Ibrahim. Some people, so you have to know yourself and what it is you are capable of. But ultimately, if you are going to do more than one thing, you have to be very, very keen on building structures. So for instance, now HairSense, as an organization, has multiple branches. As at this morning, we have 13 branches and 4 in development. We have multiple staff across these branches, and these branches are spread across Southwest and Abuja. But if I'm not around for a year, the business is still going to run because there are structures in place. There's a clear reporting procedure. There's a clear standard operating procedure. So everybody knows what to do when. Everybody knows what he is in charge of and who the next person is that they need to report to if they need whatever.
So you don't have to be involved in the day-to-day?
I'm not even involved in the day-to-day. So it gives me a lot of time to be able to do a lot of other things. And so I just felt like, okay, so 2023, I partied a lot. Not wild parties, but I was always in almost every other Owambe. Because I love Owambe. I'm not going to lie. So, but I just realized that I'm doing this
also
because...
a networking opportunity.
Yes. In fact, 2023, hands down, was the year that I networked the most. But again, you get to a point where you find out that, look, as far as networks are concerned, I'm good. Because I might not know everybody, but I know somebody that knows somebody that knows somebody that can get what it is that I want at whatever point in time. So you slow down on the networking and then you build more, which is what we are into now. Currently, we're in 7 industries, as you have mentioned: media, sports, hospitality, real estate, and all of that. Because I realized that all I need to do is the groundwork, put in the structures, and then allow it to run. So, but, like I said earlier, a lot of people have this notion that business is supposed to be a one-man thing. So you are the one calling the shots, you have to be the one to, even though, I personally...
Because I think there's also that fear, for most entrepreneurs, that will that person carry my vision the way I want it carried?
Well, so you see, as much as, I don't engage in the day-to-day of our businesses, I still drive policy, I still drive strategy, I still drive growth. So I personally scout every single branch that we are going to open in. I personally scout, carry out the feasibility study, I study the markets, I do all of that. I personally fit out every store. You understand? Because I have experiences from pastors of the things that we didn't get right operationally. Some things might look very aesthetically pleasing, but be an operational disaster. So I make sure that I fit out every store. But, so we recently opened at Ikeja City Mall at Alausa. And I was there every day for like a month when we were fitting out. And then, people around got used to seeing me. But the day we opened, the next day I was off. And, so now sometimes I'm not there for a month. And people are like, what happened? I said, I told you people, this is when I work. And that's what I enjoy doing the most, building new things. It might be a new branch, it might be a new business, but you are building. And so, we need to understand as entrepreneurs that Nigeria as a country needs us to be more of creators than consumers. We need to create things that are bigger than us. For instance, the entire GDP of Nigeria in 2024 was about 187.8 billion. Facebook's revenue in that same 2024 was 167 or thereabouts billion. Apple was 390 billion. So Apple's revenue is over 2 times the GDP of Nigeria.
And it's fun when they pay taxes, because the taxes are huge.
You get? So they could do it. And, given that the world is now a global village, Facebook could have come out of that. Okay, I'm saying hypothetically that if Facebook was started in Nigeria, barring all the challenges, unfriendly government policy, lack of startup funding, right. If Facebook has started in Nigeria and runs from Nigeria, it will still run the same way that it is running. Location is no longer a barrier for businesses to run and thrive, which means that somebody can come up now, create a rival to Facebook, and have that same... Imagine that somebody is able to create something that rivals Facebook. Maybe not in the social media space, maybe in the agri-tech space, maybe in the health tech space, maybe that can create that kind of revenue. That you have created something that everybody in the world needs, everybody in the world is using, and you are making that much money from it, and that money is domiciled in Nigeria. Everybody in Nigeria will benefit from it. Because you alone are doing more than every other person as a nation is doing. So we need to stop thinking about what government can give to us. I know it sounds cliche, but that is the solution. Government cannot today, on their own, create a $1 trillion economy out of crude oil or customs or tax. It is people that will create things that will generate that revenue. We have Africa as a block. You don't need to target the US as your customers, even though we do a lot of trade, because now there are a lot of Nigerians in diaspora. But you can target Africa as your market. And that's over 1 billion people, if I'm not mistaken. Now, are we up to 1 billion in Africa? About 800 and something.
We're getting there.
So now you have that market. That's your market size. What do Africans need that I can provide? I understand the culture. I understand the people. The terrain is similar. What do Africans need that I can provide and get money from them with? If you're able to do that, maybe you don't do 167, maybe you don't do 300 and something billion, but you do 10 billion, you do $20 billion, you do $30 billion. If we have 20, 30 of that in Nigeria, the economy will grow.
And talking about growing and raises and raising capital, I did talk about Africa Startup Funding for the first half. It's a record funding. See most of these startups raising huge capital in Africa, and most of the time you see that this capital is coming from outside our continent, and at some point there will be an exit.
That money, we're starting to see this
that money will move out
exactly
of Africa. But we're celebrating, attracting, these, startups raising these funds. Are we really making it when you really look at it?
So if you look, so for me, I think it was yesterday that I saw in the news that which corporation was it?
The Chowdeck.
Chowdeck
raised
$9 million.
Right.
And everybody was happy, but I was sad. The first thought that came to my mind was, God save Chowdeck. Because so far, they are doing very well. And if you look at the statistics or the trend, the more the funding that businesses get, save for a few, like Flutterwave, like Paystack, save for a few, the more the funding, the earlier the collapse. If you check the trend, there have been a lot of funding of startups that have received funds, and in a year, in 2 years, they're bankrupt, they're shutting down, they're laying off staff. So that tells you that the problems that we have go beyond funding. People talk about, so I'll tell you hands down as an entrepreneur that the number one problem that I face is access to human resources, people to employ. But if you ask the average Nigerian on the street, they'll tell you Nigeria has an unemployment problem. We do not have an unemployment problem. I know every single business owner that I know on a daily basis are looking for people to employ. And they can't find. The second problem that we have is internal thefts. Every single business person that you ask will tell you that at some point or the other, millions have been stolen from their business, and they were able to do almost nothing about it. I have a friend who has about 14 branches, and in all of the 14 branches, they were stealing from him. They were selling goods, and they were deleting it from the database, and he was looking at it that, they don't steal 10%. They'll steal 70% and leave you with 30%. Some will steal 80% and leave you with 20%. So these are the problems that we face, as a people, these are the things that we need to solve. We have to achieve a mindset shift. And that's why every day I'm questioning, where is national orientation agency? What are people doing? So we have that mindset as a people that we have to make it no matter how.
Maybe because of high poverty, 150 million, multidimensionally poor.
I think it's high greed. I think it's high greed because I've been poor. I've been poor, and let me tell you a secret. I got married when I was 24. Straight out, I think I was still in school. I was rounding up my final year, I got married. And when I got married, I was working for a newly formed company called Asabikun Investments Limited. And my salary was 5,500. That was when I got married in 2016. And so I can't say that I had money, but I didn't take a dime from that company. And then after I left Asabikun, I started my own company, Worcester Educational Resources Limited. And so we talk about funding. I'm trying to come there and then circle back to the question. I brought 25 people together, and they were contributing 5,000 naira monthly to set up a school. So we set up a limited liability company first. So it's a proper fund. It's a properly self-funded, or should I say crowd-funded startup, which is the mood that I think that we should adopt as a nation, as against going abroad to bring in funding. We all saw what happened to Jumia. It's basically now not Nigerian-owned. The funds are just being taken out of the economy. We need funds that will stay in the economy. So 30 people, 50 people, 100 people can come together and contribute 10,000 naira monthly. 10,000 naira monthly, 100 people, that's something. 1,000 people can come together. You just need a framework, which is where government comes in. So if somebody, takes this money and up and leaves, what happens? What's the security? What's the guarantee that our funds are going to be safe? So a framework has to be created for these things to thrive. And I think this is where government is missing it. What Nigerians need from government is very minimal. We don't want government to come and build houses for... Nigerians are not demanding that. Nigerians just want you to give them that little push. So as against our normal upbringing and mindset that you have to own everything and have 100% ownership, we have to start to see that, for instance, now what we talked about Facebook, if you know the percentage ownership of Mark Zuckerberg in Facebook, you will be surprised. And he's still one of the wealthiest people in the world with that minute ownership, less than 10%. So it's better.
And we know people are mostly, founders are afraid of, letting out shares of their business. Because
there's no framework to punish erring partners. And there's no, forgive me for saying that, people don't have confidence in the judicial system. So if I do business with you and you cheat me or you defraud the business, I take you to court. We can be there for 10 years and you're dragging it out and somebody is giving something to somebody and at the end of the day, everything is lost. But if there was a judicial system that people are confident in, or don't even go all out and say, okay, the judiciary should handle it. Create a special business arbitration judicial committee, whatever it is, so that it's easier for you to hear cases that have to do with SMEs and large corporations, and people don't have to... Confidence will be bolstered. People will engage in partnerships more because...
And investors love justice.
Exactly.
Where they can get justice easily and fast.
We're not going to be able to do it.
All right. So, definitely a lot to unpack, today. Yeah. And definitely when it comes to entrepreneurship, the conversation keeps, going at this point. But thank you so much for helping us unpack this. Mr. Ahmed Lawal is the MD of Lamad Concepts. Thank you so much for coming on today.
Thank you.
It's great having you. Thank you. All right, so let's explore other matters now. We see the oil market. We're seeing some kind of recovery this morning. There's also A lot of talk about oil revenue and oil production and some countries buying oil from other countries at this point. Let's discuss all of this now with Dr. Ifeoma Nwokolo, the Vice President, Economic Research, Financial Derivatives Company. Great to have you on the show. Good morning.
Good morning, Laddie. Thank you for having me.
So I'm seeing there are reports now that refineries in India are buying Nigerian crude, while on the other side we're seeing the Dangote Petroleum Refinery largely running for American oil. At this point, help us understand this.
Okay, well, we know that we devalued our currency, and the essence of devaluing currency is for exporting, and we have seen that in recent time, emerging countries like India, Vietnam, and others are beginning to demand for our export of our products, whether non-oil products, whether oil products. So that's why we are seeing that, because when you devalue your currency, your commodity becomes cheaper in the global market. So that's why we are seeing the trend. And this has led to oil tax revenue for government, and knowing that fully well that our oil production has also increased to about 1.5 million barrels per day. And if oil production increase, of course, we are going to see oil tax revenue increase as well. So this surge in the demand for our oil globally is what is leading to this particular revenue. And that's why we're seeing Naira getting stronger, because as our oil earnings increase, both oil earnings and non-oil earnings increase, we are going to see that the Naira will get stronger. Our gross external reserve has also increased to about over $40 billion recently. So all these things put together is why we are seeing what we are seeing domestically, whether in the appreciation of Naira, our gross reserve, then tax earnings for governments when it comes to oil tax. We have seen that oil tax revenue has surged by over 41%, reaching about 3.69 trillion in first half of 2025 compared to 2024, when it was about 2.6 trillion. So we are seeing this because of the surge in demand for our commodities.
So I guess at this point, whoever is buying our commodities at this point, they're having a fun time. Right now, I'm trying to imagine the time where
Exactly.
the Naira was about 400, to the dollar about 600, and looking at where we are now, at 1,005 something. That means those countries buying our commodities are cashing out at this point. They're getting more.
Of course they are. They're cashing out big time.
All right,
They're
so
cashing out.
so definitely not a plus for Nigerians at this point when it comes to currency weakness, because we're import dependent at this point. So definitely a lot to unpack in that scene there. But let's look at the global space now with U.S. Russia engaging in fresh talks amid this geopolitical tension. How do you see potential shifts in their relationship influencing, global oil prices? We're still seeing that range trade there with Brent and WTI.
Okay, with what we are seeing today, the market is nervous because of the US-Russia talk, which is will take place in a few days from now. And their nervousness is based on two standpoints. One, that there will be a peaceful agreement. So once there's a ceasefire, we are going to see it to escalate the supply risk. And also there is tendency that the sanction on Russia will be removed. So that is why we are seeing this happening. But this is just basically a short-term jump. Even this morning, we also saw that the oil price increased from 66 yesterday to about $67 per barrel. And this is because US-China tariff truce has been extended for 90 days. So this is additional push in the market. So all of these are short-term jump, I would say, but in the medium term, on the flip side, we'll see that in the medium term, pricing is going to be driven basically by OPEC policy, OPEC plus, because OPEC has already announced an increase in production of oil by over 500,000 barrels per day. And if this happens, what is going to happen? Let's not forget that if Goldman Sachs also has projected that oil price will decline to about $62 per barrel by the end of 2025. So in all of this, we ask ourselves, where does Nigeria stand in all of this? What is the implication for Nigeria? The implication is that as oil price declines, it is important that oil production in Nigeria increases as well. Because if you put side by side when oil price was about $73 per barrel and we're producing about $1.4 million per barrel, put it side by side, now that oil price is about $66 per barrel compared to 1.5 million barrels that we are producing. You put it side by side, you see that our revenue is flat. And also, if oil price should decline to about 62%, it's also important that our oil production should also increase to about 1.6 million barrels per day. That's the only way we can maintain the revenue that we are receiving today to be flat. And also, if this happens, it's going to be a plus for us because even though oil price is falling, our oil production is also high, meeting up with our revenue as usual.
So I guess
if it's otherwise,
I guess an inverse relationship between oil prices and production at this point. As the prices go lower, let's ramp up more oil out of the ground at this time. All right, let's look at another, foreign currency earner now. We're seeing cocoa prices there. There's some volatility playing out with the price there. What are the factors driving that? And talk to me about supply disruptions in West Africa.
Okay, there's a weak this is just speculation driven because there's a projection there's going to be a weak crop supply from West Africa. Of course, we know that West Africa supply about 70% of cocoa in the global market, and we have seen that Ghana and Ivory Coast, we have what we call there's a disruption, climate change disruption in these countries, and this has led to a decline in their outputs. And this is meant to be harvest season, but they are not harvesting as much because of all of this and erratic rainfall in these places. And it has also been projected that in Ivory Coast that decline will continue. Before now, they were producing about 2 million metric tons for over 5 years, but now it has declined to about 1.6 metric tons in recent time. Also, Ghana's production has also declined to about 600,000 metric tons. So all of this put together are factors that are driving this. So people are purchasing for future. So it's a speculative demand that we are seeing right now. That is why prices are going high. Supply is low, demand is high. That is why we are seeing this price spike. And for Nigeria, it's a plus for us because it has also increased our earnings when it comes to non-oil production. Cocoa is one of them, and it has also boosted our non-oil earnings by over 19% in H1 2025. We saw the data came out a few days ago that non-oil production has increased, and it has increased to a ton of about more than $3 billion. So these are the things that are driving our Naira today, and we are seeing that Naira has been strengthened for quite some time.
Right, and yes. I guess the local farmers too should be benefiting from this this price hike, or is it just the it's not just the upside people captured in that value chain that are making the profit here? I hope the local farmers are making it too.
Of course, the local farmers are making it.
All right, let's look at domestic commodity prices. I did see your slide earlier. It seems we're still seeing downward movement there for most of our domestic commodities.
Yes, we are seeing downward movement, but the movement is somewhat minimal. You see 3% decline, 2% decline. We're in harvest season, though harvest season started in July, but at least maybe because we are just beginning the harvest season, we've not really seen a huge decline in prices of commodities. The decline we are seeing are very minimal. Prices are still high, but minimal decline compared to when we're not in harvest season. But going forward, maybe between August, September, October, we'll see prices taper more than this. And if this happens, it's going to, you see commodity prices coming down. That's if PMS prices remain flat. Because in recent time, we saw that PMS price increase. And once PMS price increases, it affects logistic costs when it comes to taking these goods from the farm to the market and getting to consumers like you and I. So, but when we are fully in the harvest season, I think prices is supposed to come lower than this, than what we are seeing today. And let's not forget that we are already entering into the ember season. And once we enter into the ember seasons, we know what happened. Commodity prices will take another shift,
Right.
upward shift.
What do you see? Talking about the ember months, what are you seeing for fuel prices in that season?
Well, we know that Dangote will be launching his free distribution of PMS 15th of August. We are all waiting. And I know that if this happens, we may not really see erratic increase in price of PMS if that happens. And let's not forget that the price of PMS is also as a factor of global oil price. If global oil price is high, of course, we know that oil prices will increase. But if global oil price goes as low as $62 per barrel, as projected by Goldman Sachs, I think oil price will definitely decrease, coupled with the fact that distributors or PMS or filling stations are getting it at lower prices because they are not paying distribution costs, they are not paying logistic costs. So I know that this will also taper prices of commodity, because when you are buying PMS without logistic costs, and let's not forget this is across the country, is going to bring about uniform pricing across the country. So once there's a uniform pricing across the country, both in rural areas and urban areas, so bringing those commodities to here to the urban area will be cheaper, because the cost of PMS, take for instance in the eastern part, will be selling for over 1,500. But once there's a uniform pricing, it means it'll be selling for 90 something naira that is being sold here in Lagos. So there's a huge cut from the PMS price. And once that happens, you are going to see prices of commodity come down, because transportation costs will definitely come down. So
I'm hoping for a time where the market gets mature enough where we can hedge against the shocks from the global oil market, so that even though oil prices go up, PMS prices can still stay relatively stable. But thank you so much for helping us unpack this, Dr. Ifeoma Nwokolo, Vice President, Economic Research, Financial Derivatives Company. Thank you for coming on today.
Thank you for having me, Ladi.
All right, let's head straight to the global space now. We have John McCraw with the details of what's playing out right there in the global economy that's driving everything and investor sentiment at this point.
Yeah, thank you, Ladi. Well, I heard you say, closing your conversation with Dr. Ifeoma, that you look forward to a time when the Nigerian oil markets would grow so much that it will have shocks against external movement and uncertainty. But I wonder if that's really a maturity, because it's a deregulated market. So it's expected that because global oil prices are set globally, that there'll be reactions to it. So
for the main inputs, definitely. But it gets really funny when the prices stay sticky upward, and when oil prices come down, it's a slower pace, for PMS prices come down. So I guess, somehow we can manage.
Well, I don't know, but
I think
of your conversation, what sticks out most for me is the fact that India is turning to Nigerian crude
Right.
and Nigeria is turning to US,
US.
crude. I don't understand that,
It's
actually.
quite incredible.
Yeah, I don't understand that, actually. But I mean, I guess we'll keep talking about it and one day we'll be
Yeah,
able to understand
we'll
it.
figure it out
Yeah.
at some point.
All right, so good morning, everyone. Welcome to Global News segment of Business Morning. We start from the UK, where Britain's job market appears to be past the worst, with smaller than expected drop in payrolls last month, a sign that further clouds the Bank of England's decision over whether to carry on cutting interest rates. The Office of National Statistics reported 8,353 decline in employee numbers in July, the smallest fall since January, and that will bring some relief for Chancellor of the Exchequer, Rachel Reeves, who has presided over a 165,000 tumble in payroll since October, when she used her first budget to hike taxes and deliver another big rise in the minimum wage, and both took effect in April. Meanwhile, employers are reported to cut back on annual pay increases and pared back hiring in recent months as the economic slowdown took its toll on the labor market. Pay growth, including bonuses, dropped from 5% to 4.6% over the same period, giving a strong indication of employers' reluctance to hire new staff. The vacancy rate fell by 44,000. The drop of more than 5% in the 3 months to June on the previous quarter was 37th consecutive fall in vacancies and took the total to well below pre-pandemic levels of 718,000. It's the tariff again. The world's two largest economies, that's the US and China, they've again agreed to extend the deadline for tariffs to come into effect. A last-minute executive order from US President Donald Trump will prevent taxes on Chinese imports to the US from rising to 30%. Beijing also announced the extension of the tariff pause at the same time. This is according to the Ministry of Commerce. Those tariffs on goods entering the US from China were due to take effect today. The extension allows for further negotiations with Chinese Premier Xi Jinping and also prevents tariffs from rising to 145%, a level reached after tit-for-tat increases in the wake of Trump's Liberation Day announcement. That was in April. Tariffs deadline implications also are coming on in this, and that's why we're speaking to our correspondent, Maria Bird, who joins us from Washington. Hi, Maria. Good morning, and thank you for joining us. Yeah, so we see another extension to this, and so the two biggest economies seem to be in agreement, even though we still hear undertones of tension, But what does this mean, and what are the implications? Because this looks like just extending or postponing the evil day between U.S. and China.
Well, we're right here up against when the inflation reports will be released for July. And so we just received a new Bureau of Labor and Statistics chief. And so the president is right now in the midst of quite a bit of change as it relates to how much he's managing and monitoring the U.S. economy. And specifically as we look at inflation, inflation has continued to be a topic of discussion. It is one that has pushed back kind of some of the thoughts around being able to reduce interest rates. And so having this type of a tariff between the U.S. and China at this point in time could be detrimental and very challenging for the U.S. And so the president's extension until November the 10th, the additional 90 days, was probably much so advised by his economic experts within his staff and within his team. As we know that there is some predictions that potentially, if we do see rise in inflation, there could be some links to tariffs. And so I think that he is trying to avoid that. We're also coming up against the end of the year. We know the end of the year is a time in which people begin to prepare for the holiday season and shopping, and having these tariffs come right here before the end of the year would be quite challenging. And the president obviously has said that he is looking to work with China. Many other countries have come to the table. Conversations have ensued and continued between the U.S. and China, and I think there is hope that we could potentially see, because the type of tariffs you're talking about, as you said, triple digits would drastically change the economic landscape for both the U.S. and China.
Yeah, because Goldman Sachs did warn that before now we've seen companies take the fall, the consequences of the tariffs, but in the coming days it will be expected that it could shift, to consumers. They will start feeling the pinch of it. What kind of talks do you think we can expect between these two giant economies, even during this postponement?
Well, what we know is that the U.S., as you mentioned, the president has been very clear about America first. He's been very clear that he wants more manufacturing to develop and to create more jobs here in the United States, to be more open marketplace in that area. And so the president is obviously going to be negotiating with China. We know that one of the largest importer of goods comes from China here into the U.S. So looking at ways to have some goods that China purchases from the U.S. To kind of bring forth some manufacturing here, and that's so having that exchange of a relationship, that's really why we're looking at 90 days. It's because greater emphasis on the ability to create new business opportunities between the two countries, and looking at ways to leverage the U.S. being able to have additional manufacturing opportunities to leverage their job market here as well.
All right, Maria, thank you so much. You'll be counting the 90 days with them and see what they come up with by the end or just before the year. Thank you so much, Maria Bird, for your time. All right, now to other stories. Russia's oil shipments notched down for a third week, but remain comfortably within the range seen so far this year. Threat of additional tariffs are having a little immediate impact on flows ahead of a Friday meeting between the U.S. President Donald Trump and his Russian counterpart Vladimir Putin. 4-week average crude shipments fell for a third week in the latest data, while 7-day flows rebounded. Seaborne cargoes averaged 3.11 million barrels a day in the 4 weeks to August 10. That's down by about 3% from a revised 3.21 million barrels a day for the period to August 3rd. Tanker tracking data compiled also show this. Meanwhile, India's refineries, they've abandoned Russian oil for fear of the tariff for Nigerian crude, while domestic refiner Dangote Refinery relies heavily on West Texas Intermediate coming from the United States. Well, that's something that we are yet to understand. But that's it for Russia and India. And Ladi, right, that's what we talked about. And I'm sure the world is also trying to understand some of that. But Ladi, this is not fair, because I had India on the news. Right. We saw India's market, the Nifty, really rebounded yesterday. Yeah, but we see their bonds dropping. There we see drop to a 4-month low, and it's expected that it's going to continue dropping. The yield on the benchmark 10-year is going to drop. And then India's run in corporate bonds issuances is also expected to also go down. Also, right, but so on the their markets,
government side of things.
But on the stock market side, those ones are looking good.
Right. So it's quite interesting. When my earlier guest there said when he sees a problem, he throws business at it. So I'm just looking at, China, US, and all these countries. And India. And I'm wondering how Nigeria can throw business,
No, but we've thrown business. We've thrown business at it. That's why India is buying our crude.
Exactly. So let's position other commodities, at this point, and let's step in and make the money while other countries
You need to get into the crude business now.
Well, and cocoa and other commodities. I'm not going to concentrate on crude. Thank you so much, India, for giving us the details on what's playing out. And I did have a peep there into investing.com, and I see that the stocks getting attention right now. We're still seeing insurance stocks there. Most active traded there, ICO, Mutual Benefits Assurance, Universal Insurance PLC, and we see Nigeria Breweries also getting attention right there. The markets are open, the trades are going on. Are you positioning? Thank you so much for watching Business Morning this morning. I'm Ladi Williams. Bye for now.